Ben Simpfendorfer, Chief China Economist for RBS. You're going to be talking at Super Return Asia about your new book, The New Silk Road, but I presume also about the Chinese economy. First, what would you say is the outlook for the economy?
Well, I think over the next few years, the outlook is quite robust. Growth will be clipping along at around about a 10% pace. Inflation should remain low during that period. My real concern, though, is over the medium term, and for me, that's 2 to 5 years. And then the property sector could be in some trouble. You could see inflation a little bit higher, dangerously higher. So I do have some concerns over the medium term.
It's a very hot market at the moment, private equity in China. What advice would you have?
Well, the challenge, of course, is for private equity is buying majority stakes in established companies. Extraordinarily difficult, and it can be extraordinarily expensive. But for a service company then, for a private equity company, I would look specifically at the services sector. This is a sector that certainly in some areas tends to not to be heavily regulated, tends to not have a large state-owned presence. I think the growth opportunity is enormous. So there, for me, that's where private equity should focus.
In the conference over the past couple of days, people have been talking about agriculture being a pretty good sector. Food scarcity, food supplies, that's a pretty important area. Water, the environment. What other sectors, or which sectors would you highlight?
Again, I think at logistics in particular, as we see domestic demand in this part of the world start to strengthen, it's not enough for this part of the world to ship goods to Europe and the United States. It has to be able to ship goods internally, in particular internally in China. So I think logistics is important. Tourism is another. Chinese tourists are increasingly drivers of tourism industries across the world, not just in this region, but as far as Morocco. In Beijing the other day, I saw advertisements on the underground from Turkish Airlines saying, not quite like Asia, not quite like Europe, visit Turkey.
Right, well, China is resource hungry, and presumably this is one of the key themes within your book, The New Silk Road. So yes, China is resource hungry, yes, it needs energy, but how strong are those ties between the Middle East and China?
These are early days, and I think it is a relationship that 10 years ago barely existed. So it is a relationship that is still developing. China imports about China consumes about 1 out of every 4 barrels of oil. It comes from the Middle East. So increasingly there is a dependency, and at the same time China has overtaken the United States as the world's largest exporter to the Middle East. And that's the first time the Middle East has lost its #1 position since the 1960s. So still early days, but the speed of change is remarkable, and the extent to which it echoes at historical trade corridors, not just between China and the Middle East, but South Asia, Central Asia, even into North Africa. It's an important trend to look out for.
And you mentioned a particular town on the coast that has very strong Arab ties. How did that come about?
Well, it came about for 2 reasons. And the first is that China grew as an exporter of these low-cost goods that are so popular in emerging markets. Cheap toys and cheap hardware. Most of those goods are sold in this small city called Yiwu, about a 4-hour drive south of Shanghai. At the same time, Arab traders were finding it increasingly difficult to get visas to visit Europe or the United States. We're finding it relatively simple to visit China, and so it was this convergence, if you like, of these 2 events that has resulted in 200,000 Arab visitors to this small coastal city of Yiwu every year.
You're not expecting ties between the Middle East and China to supplant China's other major trading partners, the US, Europe?
No, certainly not. The Middle East only accounts for 4% of China's exports. The United States accounts for a little bit more than 20%. So, no, certainly not. The Middle East is not a substitute for the United States. But it is increasingly important, and whether because of oil or because of Islam, the relationships between China and the Middle East are a very important pillar to global rebalancing.
Just to go back a bit, back to the economy, would you say that the property market is the #1 driver of the economy right now?
It is at the moment, and I say that not just because of the money that's being spent building residential apartments. A lot of money is being spent, but it's also the knock-on effects to the manufacturing sector. So the steel, the copper pipes, the furniture, the electronics that are used to build or to fill up those houses. So if the property sector was to correct, if you were to see a few years of very weak investment spending in the sector, the impact on the manufacturing sector would be enormous.
Is inflation now going to be a major threat?
In the medium term, yes. In the short term, I don't think so. Non-food prices are not rising rapidly. Food prices are starting to firm up, but they're not spiking, and that's our fear, of course. But over the medium term, inflation is a major threat, and that's because this is a country that faces structural inflation pressures from wages, land, raw materials, and it's something the central bank is going to have to grapple with.
Ben Simpfendorfer, author of The New Silk Road and Chief China Economist for RBS, thanks a lot.
Thank you very much.